Hello everyone, welcome back to another exciting episode of Under 10 Minutes. For thousands of years, two metals have shaped empires, fueled revolutions, and protected wealth through storms of history. Gold and silver, more than commodities, they are civilization's oldest currencies. But what happens when their balance shifts? Today, we'll uncover the fascinating story of their origins, their traditional ratios, the current market dynamics, and whether these metals are gearing up for a bullish run. So let's get started. Gold and silver's story begins deep in the earth, forged in the violent explosions of ancient stars and scattered across our planet in veins and deposits. Long before paper money or digital finance, humans were drawn to their luster. Gold, rare and untarnished, became a symbol of divinity and power. Silver, more abundant but equally captivating, was prized for its brilliance and utility. Ancient civilizations from Mesopotamia to Egypt crafted jewelry, coins, and sacred artifacts from these metals. By 600 BCE, the Lydians in modern day Turkey minted the first standardized coins of gold and silver, laying the foundation for money as we know it. These metals weren't just wealth, they were a universal language of value across cultures and centuries. For the longest of time, the gold to silver ratio hovered around 15:1. Ancient Rome fixed it near this level, and even into the 19th century, the United States maintained a ratio of 16:1 under its bimetallic standard, which was based on the mining realities. Silver was more abundant, but gold carried prestige and scarcity. Together, they formed the backbone of trade, wealth, and power. By the time of 20th and 21st centuries, the ratio has swung wildly. During crisis, gold often outpaces silver, pushing the ratio higher. In 2020, during the pandemic crisis, the ratio spiked above 120:1, the highest in history. Analysts today suggest a reversion closer to 60 to 70:1 as silver catches up, driven by industrial demand and limited supply. The dance continues, but the rhythm has changed. As of early 2026, gold in India trades around 1,56,000 rupees per 10 grams, while silver sits near 2,80,000 rupees per kilogram. That's roughly a ratio of 55 to 60:1, much tighter than the pandemic highs. In early 2026, gold is up 4.3% year to date, while silver surged 12.4% in just 6 trading days. A clear sign silver is playing catch up. The numbers tell a story that silver is no longer content to trail behind. Here's where it gets interesting. Gold's supply comes mostly from mining and recycling, with central banks hoarding it as reserves. Silver, however, wears two hats: precious metal and industrial workhorse. It's critical for solar panels, electronics, and medical devices. As the world accelerates into renewable energy, silver demand is exploding, yet mining output is constrained. This mismatch, rising demand, limited supply, creates a powerful bullish setup. Traditionally, stocks represent growth, but metals represent insurance. In times of inflation, geopolitical tension, or market volatility, investors flock to gold and silver. In 2026, with persistent inflation and geopolitical uncertainty, metals are outperforming many equity indices. While the Nifty 50 struggles with volatility, silver's double digit surge in days shows how quickly sentiment can shift. Let's step back a bit and look at the big picture. Back in 2000, the Nifty 50 index hovered around 1500 points. By early 2026, it has climbed to around 22,000 points, a gain of roughly 1,366%, compounding at about 11% annually. Respectable, right? But here's the twist. Gold, which traded near 6,900 per 10 grams in 2000, now sits around 1,56,000 per 10 grams, a gain of over 2,170%. Silver, at just 11,829 rupees per kilogram in 2000, now trades near 2,80,900 per kilogram. This is a remarkable gain of 2,275%. While equities compounded steadily, gold and silver delivered explosive long-term gains, especially during crisis and inflationary cycles. That raises the question, are they just hedges or have they been true bull runs in disguise? In general, gold is considered to be the hedge, the protector against inflation, currency debasement, and geopolitical risk. Its steady climb reflects this role. Silver, however, is the wild card. Beyond hedge status, silver's industrial demand, from solar panels to medical tech, makes it a growth linked commodity. Silver's sharper CAGR suggests that it's not just defensive, it's cyclical and opportunistic. Stocks compound through productivity and innovation, while metals surge when trust in markets wavers. The fact that metals outperformed equities over 26 years suggests they've been more than just insurance, they've been wealth creators. Looking ahead, gold is expected to remain steady, consolidating after its rally, but continuing to rise gradually as central banks accumulate reserves and geopolitical risks persist. Silver, however, may be entering a multi year bull cycle. Industrial demand from solar energy, EVs, and electronics is set to surge, while mining constraints tighten supply. Analysts believe silver could outpace gold in percentage gains, with the ratio potentially tightening toward 40 to 1. Gold and silver aren't just relics of history, they're actually the living assets responding to the pulse of global markets. From their cosmic origins to Rome's fixed ratios, from India's Nifty growth to today's renewable energy boom, they remind us that wealth is not just about growth but about resilience. As supply tightens and demand rises, especially for silver, the stage may be set for one of the most compelling bull runs in precious metals history. The question is, are you watching closely enough to catch it? Thanks for watching. If you enjoyed the video, hit that like button, share among your friends, and subscribe to the channel. See you in the next one. Bye bye.